As you can see, the majority of the audience are already here. We have a team of speakers, a panel, fairly compact in size. So let us thoughtfully discuss such an interesting subject. Many of you who attended the previous session will certainly understand that this particular subject matter of this session is much harder than venture investment in the previous. Venture investment, it so has turned out that the majority of people associated and legitimately associated with IT, the internet, and whereas IT, it's the mainstream presently. It's a boom. We have a lot of interesting projects. Quite beneficial and advantageous projects and transactions. But we should understand that venture investment was engendered not as a result of projects or the internet. Venture investment or startup investment, it's a traditional method of moving forward the technical progress by creating new products, services. This is what is required for the society, was and is at all times, not necessarily in relation to IT. That's why we decided it was a rather hard decision. It was not so obvious to find people who are familiar with the subject, who are in-depth in it. Of course, many transactions will be discussed today have been successful. They are venture investments in the areas not associated with IT or the internet. So we have got prepared for this session, and we were supported by the Center of Financial Studies of the Moscow State University with a presentation, and we'll start this session with the results of their studies. What did they do? They reviewed the CE region as a developing marketplace, including the countries generating many high-tech projects, and they compared the projects outside IT and reviewed the transactions, the past transactions in this sector. Yet, these studies turned out to be more extensive, and certainly they touch upon venture investment more widely. It would be interesting anyway to take a look at how these countries are considered compared with other emerging markets. And how prospective it will be to invest in venture projects in individual countries of the CE region. And so I'd like to give the floor to Sergei Studnikov, head of financial studies of the Moscow State University, and his colleague, Ludmila Matviets. Good afternoon, dear colleagues. I'd like to start off with some general words about this study as a whole. We considered more than 250 foundations managed by 220 companies in 11 countries of the CE region. Well, you'll be here, the list of these countries there. Sorry for some delay. Well, is it a presentation? Yeah, it's your presentation. What we need, not the report, but the presentation. So while it's being downloaded, this study was conducted by our Center of Applied and Financial Studies. All our team is here, present. Ludmila is in the presidium, and there are some other members in the audience. as a source of data, the source of data that we used, I mean, measure markets, capital IQ, and other interesting sources reachable in the internet. My first remark is the degree of data disclosure regarding these foundations and the venture capital leaves much to be desired. Because we noticed that oftentimes the data which was public is contradictory between various websites. Something about transactions, right or wrong, and it's very hard to tell the truth, to find the truth. We also conducted a survey, as this is by the CFA Association, regarding the future development of the industry. We sought to build the data not only on all public sources, but also to survey people inside the industry, that they could provide their vision of this market perspective for the future. We were guided by the following logic. First, we considered the market as a whole. We reviewed the number of foundations, managing companies. We made a breakdown by years, changes, then trends. Then we browsed the exits, entries and exits for investment. And following this logic, we were supported to deliver the results to you of our study. I don't know what to do. Shall we wait for the presentation to pop up, or we have to do without? But we still need it. I would suggest to wait. All the other studies we have conducted were ordered by specific companies. Unfortunately, we haven't received anything. We have not received the right to discuss these companies. They are majors, Russian majors, also in investment, similar investment. Could you highlight the current situation with finance in this country? Well, I rather meant without disclosing the results of our study. Could you summarize those and offer your vision of the current economic situation in Russia? Well, my personal assessment would differ significantly from the official one. While it's okay with our official statistics, I was not so optimistic in my studies, because many processes which are underway are of a concern to me. And not only finance, but overall the entire national development. I don't know what to start off. Well, there are many obstacles around, many problems. But what's the backbone problem? Well, what we consider it's the lack of financial literacy, so to say. We found that even our graduates of the departments of economics at universities, when they get resources, they don't know what to do with those, because the best alternative for them either to make a deposit in a bank or to invest into a unit investment fund. But when we hear that, well, there are many interesting things around, the various types of investment. Yes, he says, yes, we were told when you come to a bank, you just deposit your money and that is it, no problem. They are not somewhat proactive in investment. And this is one of the main obstacles. Seemingly you have resources on hand, but who manages that? And where they put this money, that's the question. We are living at a time when all technology obstacles are surmounted fairly easily. Yeah, thank you. Ludmila will get on with the story. details of our study. Let us start off with an overview of the number of foundations in the region. As you can see here, Russia is the leader, followed by Poland, Hungary, and the Czech Republic. We think that the main reason why these countries are there, their stock market is fairly well advanced. You can see on this graph that the relation of the shares traded to the GDP exceeds a lot versus other countries. Let us consider more carefully the Russian market. In our view, there are two extra explanations why Russia is the leader in the region in this area. First of all, because the Russian government has incentivized its economic development. For instance, the RusNano company was launched to commercialize nanotechnologies. And also, the Skolkovo Center promotes innovations and offers more choice for investors. And also the Russian Direct Investment Foundation. Well, to illustrate the second reason, let's take a look at the graph at the bottom of the slide. You can see there is a difference between interest rate on deposits and the inflation rate. Clearly, this trend in Russia shows that inflation exceeds the rate on deposits. Probably it motivates investors to looking for more investment opportunities rather than sitting idly with deposits in a bank. Another reason of this investment activity may be the business climate, investment market. For this, we divided all the countries by clusters or by three groups. Well, the key economic ratings which we used are the Corruption Perception Index, Business Doing Simplicity, and the Rights of Ownership Index. So we think these three indices describe well how business is being done in this country, and since they are conducted by independent organizations, we can trust them. There are three clusters overall. The third cluster, which includes the bottom one, green, which includes Slovenia, Poland, Hungary, and Slovakia, features the most favorable situation in the region, I mean the investment climate. Interestingly, all these countries acceded to the European Union in 2004, that is earlier than other countries of the regions. Most probably, this explains why they are a bit of a leaders in terms of business doing. The lack of Slovenia and Slovakia in the investment activity here probably is associated with the fact that the stock market in this country are a bit less developed than in other leaders of the region. Also, the second cluster is very promising, including Croatia, Romania, Serbia, and Bulgaria. Bulgaria and Romania acceded to the European Union in 2004. So it's quite logical to expect that over time they will catch up with the third cluster. In principle, we have considered some most striking irregularities, and now we can review the transactions made by the foundation. You can see on the left graph that the majority of the transactions were closed in 2011. Possibly another explanation may be given. The public initiative in incentivizing investment in 2011 and later probably yielded fraud. For example, as the above mentioned, the Direct Investment Fund in Russia or the Jeremy program in Hungary and over the entire European Union. A decline in transactions in 2012 probably resulted from exacerbated crisis in the European Union. As for the overall number of transactions, investment in the region accounted for about 20% of the global level, while capital withdrawal was a level of 10% of the global. Well, the average size of a transaction in the region exceeds that globally twice, which probably provides evidence to an advanced private equity sector and the underdeveloped venture capital sector, and indirectly may indicate to the underfinancing of business at early stages. As for the most popular exits, investors use most often direct sales. That is 75%. In only 7% of the investors withdrew their capital using IPO. Let's go over to the next slide. to review the ratio of external and domestic investment. 87% of all the transactions closed by the domestic foundations were closed inside the region. But external investments continue to impact significantly on the regional development. You can see on this graph the overall, the total number of transactions made by these foundations exceeds a similar indicator for the domestic foundations, although quantitatively domestic transactions exceeded. They prevailed. Now let us consider investment total and preferences across the industry. By 2012, based on tentative data, the share of investments versus the GDP got stabilized at a level of 0.7%, or 7.00%, and consumer goods, financial, and the medical sector dominated in these transactions. Now we can go over to exits from investment projects. As we found during our study, that the venture capital foundation exits from its investments almost 100%. The average share of exits is about 75% across the entire time period. As for the average investment keeping period, so the longest one was 4.8 years in Poland, and the shortest one was 2 years for Ukraine. In our opinion, there may be two explanations. The cause of that may be country risk. The expected income rate may be lower in the countries which are with a high economic growth. The most popular industries for exits were telecoms, consumer goods, and the internet. We can say that we have completed to review our statistically foreseeable results and can go over to the survey results. One of the critical issue was the issue about the reasons of low activity investment market development in the region. Among the answers, there were actually respondents were 112. The most popular ones were corruption, the low developed stock market, the lack of prospective companies for investment, and lack of possibilities for exiting. The majority of the respondents agree that investors prefer especially localized companies as globally diversified. They prefer to work locally because local specialization presumes good knowledge of the market and results in better weighted, better balanced investment decisions. The other two trends were detected during the survey of professionals of the stock market. The majority of them say that private equity agents are in demand, but not that high as it should be. Also, an assumption was confirmed that investors need more information about investment decisions and about the management of the managing companies. Well, taking into account all this information, we can go over to the key conclusions of our study. First of all, we believe that the leaders of the region will continue to hold the lead further on because these countries have already advanced and enjoy an advanced stock market, and the government is aimed at developing the investment market, and there are some long-term public long-term programs to reach the goal. Investors also are inclined to demand more information about investment decisions. In the event of the venture capital market in Russia, also to cut down management bonuses and compensation, which actually provides evidence to the growing control by the government over investors. Well, since the IPO exits are not so common, it was shown on the graph, private equity placements are very prospective and also may provide an impetus to the entire investment market in the region. And finally, unfortunately, we did not discover any clear-cut trends in the IPO market development. Yet we believe that exits to IPO will be on the rise, and in the event the stock market in the region, of course, develops. These are the main conclusions of our study. Thank you.
Thank you very much. We see that the market cannot be considered apart from telecoms. And thanks a lot for this comprehensive overview of the region in the CEE. We'll come back to that in questions and answers. And I would like to give the floor to two other participants of our discussion. I have not introduced them, by the way. We have head of Academy of Skolkovo startup, Lawrence Wright. Yeah, I don't have the position, head of Astor Capital, Will Andrich. So I think we'll make a move to those who makes the market and create venture projects to venture entrepreneurs, where Skolkovo Academy works with. So I give the floor to Lawrence. Thank you. Good afternoon, colleagues, friends. Thanks for the invitation today to CFA. So let me please download the presentation. First, I'd like to explain that I'm not at Skolkovo. There are two Skolkovo Foundation, which you hear a lot in the press, and private business school. The Moscow School of Management, Skolkovo, 7 years. There's private and growing elite business school of Russia. This is first. Second, I've been working for a while in Russia with technologies, commercialization, and the issue is familiar, the problems related to that. When I came to Skolkovo school, I wanted to develop this from the other. If there's a lot of technologies that are worth commercialization, we should work on that and understand that scientists are not the people who need to deal with that. We need to develop entrepreneurship class that should get in touch and combine efforts to people who promote technologies and make new emerging companies of high tech. We as a school are not exclusively dealing with that, and we're working on everything, including IT projects. And as we see, development of business model is hard to detach from IT, because IT is in every business. And biotech and retail, and it's all present. So therefore, if we look at the trends that you probably seen, these numbers kind of moderate, if not including Russia, in these numbers of investment in the last 2010, 60 thousand million euros is only 2% of all European share of venture investment. So this is a seed and early stage and investment. Although we have seen the growth, maybe it's post-crisis trends turn around. So, but this trend is been mentioned by Ludmila and Sergei that at a later stage, and it is seen, this trend, which can be only temporary. And I think at this moment we should pay attention, because people investing at a later stage, this is a more clear how to invest. It's more like financial indicators and returns, and we can understand the deal and structure it appropriately. However, this can be done only a certain period of time, if not dealing. It's like a pipeline. If no development of startup project in the beginning, then in some time all other projects, later projects, will also decline. So the deficit, which is seen is both in Russia and Eastern Europe, is deficit of quality startups. When I joined Skolkovo and started studying this more deeply, why is it so? It's just lack of financing maybe partially, but more likely if we'll look broader how venture investors indicators over the last 10 years, American venture investment showed -4% overall. It's like revenues, earnings, performance. And European funds for the last 30 years show negative performance as well. So I don't expect that in Russia, Eastern Europe would be better. Because this business should be profitable and looks like a lottery rather than systemic profitable business at early stage. Therefore, I think that when we study these issues, venture capital was born in US and developing around the world, and it's worth asking the question why. Why it is so difficult? And here it's even worse. And therefore, for the last 10 years, there's a phenomenon of business accelerator. Have you heard of that? Who knows what is accelerator? Okay, not everyone. So this is some kind of private business incubators that separate number of projects and applications, some winners, that they invest small money, like $10,000, provide mentorship, some services, platform, and at the exit in 3-4 months, they have to raise additional money. So this phenomenon of accelerator emerged with exiting venture capital from early stage, even at Silicon Valley, where it's #1 in the world in terms of investment. And this phenomenon is important because it takes this niche. And business angels also had this niche at early stage when the venture fund just left a later stage of investment. So what we see was a report from Kaufman, major fund #1 on entrepreneurship and investment in the world, and a report of results of accelerators in North America, because accelerator also expanding both in Eastern Europe and Russia, and it's about 30 have not provided any output. So we see it's a difficult job, and it's hard to achieve success, and only 2 had Y Combinator, Y that you see, and second Techstars, and there are 2-3 others that do something but cannot be named as a super success. So therefore, just like in venture industry, there are some winners and success, and a large number of losers. And accelerators, small number of those who work well, and majority is not working at all. Therefore, you need to understand that it's quite difficult work. So coming back to the issue, what is needed and why it's not working, my opinion is that this market is missing 2 components. First is entrepreneurs that are competent, and competence is knowledge and skills, what to do and how to do startups and high-tech startup, and this is so-called smart money. I'm talking a lot about that, but it's not exactly clear what is this. So I would like to tell you and show cases and what we do and to rectify the situation. If we look at entrepreneurship issues and why it is so weakly developed, mostly startups fail, more than 90% fail, and main reason is lack. It's not that technologies doesn't work or systems or services. That's lack of customers, because they don't understand the market very well, and they are not oriented on the market. And when we discuss and speak with scholars and with great ideas, they detached culturally and historically and physically from the market, and they don't understand how to make a product that will be in demand. And the author of this book, Blank, which became a guru and developed the customer development. This method is widespread around the world and changes the way startups works and how investors provide money. And that's fundamental change of development of the startup company. And I think that it's worth paying attention to, because it has a large effect, and they started from Silicon Valley and approached other parts of the world. And Blank created some definition what a startup. That's only a temporary institution that are in search of repeatable and scalable business model, and not just creating some small version of a big company that repeats the same, replicate the same management principles in large companies. That's a different style of management and method of company development that would provide better results than that if you follow this method. Therefore, when we understand and decide issues, who is the client, and which should be the properties of our product, based on opening this, then we go on the right path. And when we understand the business model and understand that it's a large market, like more than $500 million, and it's enough to attract attention of venture investor, and understand that they can grow quite fast, then we move to more structured companies that exist as a normal structure of companies that we understand from the corporate world. Therefore, our program and Startup Academy, we provide a comprehensive approach to competence development, which is main. But it shouldn't be in a vacuum. We apply it in practice, with real people that build many times repeatedly innovative businesses, and applying everything needed so that they can reach success. And apply these methods already a third time. We can say, if we go forward, we see results, and we mix IT companies here, but also innovative, because we cannot filter them, and there are medical services and medical technologies related to diagnostics, and other projects that take more time for development and innovative. By definition, they develop longer than IT projects that based on some diagnostics and quick diagnostics. They raised seed money as people from Riga. There are a number of examples that this method works and tells that we follow, but that's not enough. It's only one side of the matter. A second is so-called smart money. We attracted Skolkovo jointly program created with Kaufman Fellows. Kaufman Fellows, as for those who don't know, that's exclusive only apprenticeship program for venture investors in the world. So in order to become venture investor is very difficult. And to have this training, preparation. There is no school who will teach you to become venture investor. Most investors that we see in Russia is mostly people from investment banks. And it's all great, but there is lacking some things that venture investors have to know and learn. And this venture Kaufman fellows, for the last 20 years, they educated more than 400 venture capitalists that already invested more than $6 billion in thousands of different startups around the world, and created 500,000 jobs and more than $20 billion. And this is all representatives and respected institution that created this world network. And together with them, we launched in October with our fourth startup academy, Venture Capital Academy, which also have a weekly program for education and practices with venture investors, so that create this layer. And I'm interested in that because I see is between the Startup Academy and Venture Academy that they are scalable and they are replicable, and the models have been proved and they work, and this responds to the needs of the market. And between them, most importantly, there is good synergy, because those who work and develop their innovative projects, on the one hand, receive feedback from investors, and investors, on the other hand, they learn and practice with the same projects and develop them and invest if they want. So our graduates already understand, and $4 million of venture investment, that's including IT projects and non-IT and innovative and some household products and then construction products, shops, etc. So on this, I'm about to finish and answer questions if you have. Thanks for your attention. Okay, before we give the floor, thanks a lot. Before I give the floor to another speaker, I have to ask a question. That we see that among your audience's general trend that mostly is IT, internet projects, and most have questioned why investors and are more actively investing in IT projects rather than non-IT. So the answer is partially, you said that the horizon is shorter and it's easier to exit these projects, and in the non-IT, the horizon is longer and risks are higher. So are investors reasonable understanding that most IT projects that they invest are going to fail? Or better focus on a longer term and clear non-IT projects as it used to be in the past? My personal opinion that innovative projects are more interesting. Although we need to understand that, with all respect to investors, their behavior looks like a herd, and they go on the trend. They follow the trend, and there's a lot of written about that in Silicon Valley, where we work very often. For example, this drag to IT, that it needs not so much money, and it can be understood in terms of. On the other hand, it takes all the free resources and what is really needed, like new medical, new sources of energy and solar energy. They are deprived of this opportunity, and this is very bad for innovation when we see that the general trend of innovative development declines. And that's because we try to I get some new social media and mobile application that can be cool, and all the young people like it. But
however, we don't have a real change in our life. In effect, it does not improve our life. It may entertain you, but does not raise the quality. I have the previous experience. The investment technologies, I am absolutely confident that potentially there's a lot of innovations, but just people don't know how to implement those. And it's not a lack of funding, it's rather a lack of connection with the market and the entrepreneurs. Thank you for such a blunt view of the things. I cannot help agreeing with you. Well, it's logical to give the floor now to an investing country, the president of a company investing in venture projects, to try to understand what's the view of the segment of venture investment the investors have. Thank you. My name is Andrich. I'm president of the Astor Capital, the company which invests in non-IT technologies. For a start, I'd like to ask you, those of you who invest in a non-IT segment, can you raise hands, please? Fine. And do you have here those who are in IT segment? Thank you. In my presentation, I'll try to explain these statistics. It's fairly, I understand the reasons. It's interesting. When this presentation was prepared, where do you find value? This expression may be translated into Russian as where you can find value. You have heard an expression, added value. Unfortunately, it's a joke that when foreigners come to Russia, they find value and added value. Some others find income and capital growth. The Russian language is great and powerful, but very simple concepts can explain very complicated things. If you look at this picture, you can see the life cycle of the company. And unfortunately, there's a problem with investment here because this picture is different in each segment. And if we take, when we discuss seed capital and angels, they depend on venture capitals who invest in the third and fourth rounds. Venture capitalists depend on those who work in an equity project, who invest into deeper pockets in order to take the company up to an IPO. When we discuss IPO or distress, this entire picture is the life support system of capitalism, of company life. It's a financial investor. And when we look at an issue, we should understand what we have around each company in each individual cycle of it. And we can see mostly vacuum there. That is why we should look very carefully at all the parts of the system. As for Russia, why technologies are in this condition as they are? If we look at what happened with privatization, then probably capital building we can divide into three phases. Phase one, it's in effect to what extent successfully, how close you are to privatization as a process. All of us know what companies got out from that. Phase two, when people used to take on a blind risk for an asset, and due to the value growth of this asset, when during a tide, for instance, all the boats were raised and they did a good business. And now we are in a third phase, when human capital, when technologies, investment in these things, when they yield fruit. And now we can discuss investment in the segments which no one mentioned earlier. When we discussing non-IT segment. This graph is very important. I certainly respect invest in IT projects, but if you take multipliers like 100 and higher, I understand that during our lifetime, I'll never get back the income, the return on the ROI. If it's 100 and high, maybe it will take 100 years if everything goes the same way like now. What's a multiplier? I think the majority of you know what it is. We discuss business evaluation. We divide it into sales or EBITDA or net income. We took on the slide the business evaluation transactions of SMBs as divided by sales. This blue line probably is about 1, equal to 1. If you invest in a non-IT technology, and you, for instance, would like to establish a network of dentistries, well, certainly you will sell it for less than 1 year income. So what to do? You'll have to look at another segment, which is involved in medications supplies and medical equipment supplies. You do common business, you modify your strategy, and you go to some other multipliers. You will get not a multiplier for growth, but also a several-fold growth on a multiplier, just say changing the segment where you are. This picture is very important for us. I mean, the non-IT segment. So, what's as I explained earlier, the first 2 phases sort of has scooped all the talent available at that time. And our present technology teams are in a deplorable state. What is important for investment in production technologies? If you can develop some mechanism, a lab, and then commercialize it and put it on a mass scale or mass production, it is more or less a painless issue. But if you deal with mineral resource extraction, you need an asset. You cannot work in a lab only. What the company is working with technology, they don't have an asset against security. And those who have only security, and that's it, all of them count on a thing as a tide. This is where an obstacle was. We found an institution when we buy an asset, a technology, and we adapt it to this particular asset. And then we get a playground to test technologies. We get a stronger leverage in our technologies. Of course, if you invest properly, and this technology goes forward, then we can multiply it further. As for success stories, everybody knows how the internet has changed our life. Many have heard about shale in the oil and gas sector. Of course, the technology of hydrocarbon production has been dramatically changed, like the internet and the IT changed our life. And this is what we are doing. We work with hydrocarbon technologies, gold mining, nickel mining. We are very positive toward the gold because we believe that a mass quantitative stimulation by the Federal Reserve, now Japan has joined in, other countries are coming, so the entire ground will be expanded for the monetary value of gold to be increased. We are absolutely confident in that, despite all the speculations now in the market. Is there any question? You are welcome. Thank you. Well, indeed, it was rather unexpected to see that there are companies which use non-public money, and they build intensively their business model on ventures, on investment in this sector. I mean, innovations. I enjoyed your question you put to the audience. I saw the majority of hands, they were not raised, so I'd like to modify a bit in the light of what has been said. If I, for example, each of you gets 10 million US for an investment. Maybe some privatization vouchers, whatever. Where would you rather invest? Please raise your hands. You prefer rather IT or high-tech, the internet, yeah, for startups there? Uh-huh. Now please raise your hand those who would invest in non-IT startups. Well, we see that the promo action has succeeded. Unfortunately, we did not ask this question at the very beginning. Furthermore, even at the previous session, where interesting stories was given as well supported with reasons how the internet startups operate and how the business model of investment in dozens of projects, expecting only one or two to come true, but to close all the loss, that will be fine. And many people live on that. Now, let's take on a short interactive session. Yeah, any questions? Questions, please? Yes. Vyacheslav Volkov, thank you for the presentation. If you don't mind, I have two questions, general questions. The first one, whether there are particulars of venture investment in Russia as the percentage of failures and the income rate. Well, second, everybody agrees that Russia does not enjoy a developed approach to the IPO. Do we have some past record on that? How to organize IPO for Russia? I don't have data on hand about Russia, how such approaches can be. I haven't heard anything about successful foundation closures. Maybe there are some, but there's less transparency in Russia, and people are reluctant to say that how it's done openly by Western foundations. And the second question was, the second part of the question, the data on failures. Do you have any data on failures? Well, I have my own data on that. It's very hard to discuss data in general because, as I explained, our industry is in embryo. As for going for IPO, our data has been collected since 2005-2007. That was a group of big peak companies. We raised it from 1 unit to 12 billion, and we placed in 2007 on the London Stock Exchange. As for venture investment, I have warned you that such continuum does not exist. If you find that you make an investment somewhere and then you go for an IPO, that's very hard. But we have one Utinet company. We invested in the second round. So we organized a Russian IPO. Now we think about promoting it further. Playing in the business is a very brutal game. Only 50% of the companies survive 1 year. That's U.S. statistics. Up to the third year of existence, only 20% survive. By the 10th year, only 5% survive. In Russia, we have been here for the 10th year, so we can be proud of this data. If you take Russian data, it's a dozen times worse. If someone believes that this game, how make money, quick money, is rather brutal, those who survive, they are real leaders, the strongest ones, in particular in Russia. Yes, right. And those who are in it, they don't do it most probably for money, but rather their love for this business, and also as entrepreneurs, as investors. Of course, investors must make profit. But as for these approaches to IPO, I haven't seen a single investor who is set up for going for IPO. I believe, after he has forfeited all his capabilities, we see now that what's happening with the latest IPOs in IT and high tech, and rather more takeovers take place, takeovers of companies. I agree with the previous speaker that it's very important for an investor to be a professional entrepreneur. I would say a serious entrepreneur, successful, serious entrepreneur. Until you have got all the bumps and bruises, until you have made all the mistakes possible in business, you may not establish your own business and invest third parties' money. But the idea is very simple. When you make something well for the first time, then you think you're just lucky. Just lucky. When you take a second attempt, then you believe, well, maybe I know something indeed. When you are successful for the third and for the fourth, fifth time, you understand, you know the system, you know the approach. So businessman education, for those who become investors and fill up the vacuum of a company life cycle, it takes years and years. I was surprised why the government doesn't give high importance to that, because this is a vascular system of capitalism. It nourishes economy from beginning to end. But very little focus being given to that. There is RusNano, there is Russian venture companies, but for such a vast country as Russia, is very little. Well, let us probably take a look wider than Russia, because what we have heard makes an impression that the obstacles before non-IT ventures, they rather associated with some economic structural problems. In some countries, the situation may be different. Understandably, there are countries where this sector is more advanced, like the United States, where high focus is being given publicly by the government. Support for this project is provided in some other countries. Can we say something about the CEE region in that sense? Is it the same story as in Russia, with innovative areas? Maybe it makes sense for businessmen in order to draw investors there in the CE region. Maybe we should address this question to our Moscow University colleagues. Statistically, as with innovative transactions, what can you say about the CE countries? Well, our breakdown was mostly that 30% for venture capital and about that for private equity. But in Poland, it was rather a non-typical situation, because venture capital accounted for only 18% of all the transactions. Based on the World Bank data, costs in business establishment in Poland are lots higher than in other regional countries. While Poland, if Poland regulates it well, then probably venture capital will also get an impetus there. But venture capital, and you mean both in innovations, everywhere. Did you manage to single out the innovative segment? Well, if we consider that venture capital mostly features all the IT transactions, so maybe we can be 90% confident that it describes more innovative technologies. Well, but in this regard, we have a question, maybe the last one from me. Whether this market is linked so strongly to government support, while in small-sized countries, in the CE countries, there is no such public support as in Russia, for RusNano, for instance. There is some support publicly there, and it helps the market to grow. Is there such a... I have my own opinion. Maybe it's more about...
It's more about the size of the market. If you have a large market, then this demand will take you out due to the size of the market and broad selection of people. Small market. So when we discussed about Israel, they are focusing on American market clearly, and any mistake would be So for the CEE entrepreneurs, we can say that Russia is the most convenient place for promoting these projects, right? It all depends about cultural differences. So I said about this, someone finds value, some returns, because loss in translation is a significant part. So it's cultural things cannot be discounted, especially in the market. We call them IT technologies, but they are more social media, social and philosophy of consumption and technologies of understanding habits, what consumers do. And so it's all what we can do here can be done in Poland, no, Bulgaria not, can be done in Romania, but this is technology that works with soil and mineral resources, so it's less consumer related. So clearly, we'd like to hear a question on those who raised hand on the first question, those who do investment in innovative industry. We had some raised hands. So what problems you see in work with these investors and these projects? Are there any questions? Yes, please. I would like to add regarding previous. I live in Czech Republic for 8 years, so it's about innovative venture financing in Czech Republic is very much development and Andrich University and major company, and they try to support these projects. So 5-6 events and roundtables are happening, and our students offer their own vision of innovative development and support and provide grants. So the state doesn't support so much, but private companies, they do. That's what I wanted to say. Then why didn't it show up in statistics of deals? And I don't know. I haven't compiled statistics. I'm talking about reality. And Prague School of Economics and does it every year. What I know that all major banks finance this event, and a lot of successful projects can be seen in reality that were implemented in Prague. Maybe that's why partially the poll that we did among investors of emerging markets showed that one of the attractive countries in CEE consider Czech Republic and Poland in one of the 3 top, Russia, Czech, and Poland as most prospective. Other questions? Please. Very few questions from this side. For some, I have a question. Apart from existing funds that do private equity and venture investment, they also are people that are not formalizing its activity as funds, especially in Russia, where it's difficult procedure and having not separate entrepreneurial projects, but portfolios where they invest. Probably, Lawrence, it's a question to you. What do you think? What is the share of investment for these investors in Russia? And what do you know about the share of these investors overseas and how they relate to each other? Are you talking about business angels? Not exactly. I'm talking about separate, like rich investors that some closed funds that formally they don't form funds and they are not showed in statistics. So question more specifically, what is their share in the market? What is their weight? You can only guess. And I know a lot of such, I call them like closed funds that are professional and informal, right? And they invest non-professionally. These are like amateur, maybe hobbies that want to make on make money on construction or oil and gas, or they want because they graduated from the Tech University and they want to develop some. But usually it's not developing very well because they are closed. And so it means that no networks, no professional managers. Usually there are some friends. And accordingly, there is no deal flow. Therefore, it seems to me that's a small percentage of. I can only talk about Russia. And this is a temporary trend, and I don't think this will be forever. Please. Alexander Olenikov, how depending on the country, and we discussed a few countries changing their role in company management that investors wanted to keep, or the level of influence on company management. Probably for non-IT companies is very important, especially in a extraction industry. And does it change depending on the country? Well, here I would tell more this process of education that we discussed, how entrepreneurs are familiar with conditions of investors. This struggle is always present, and can be in US it's via term sheets, and here it's more flexible because more misunderstanding between parties. Most importantly, if you are an entrepreneur, it's like a football game. You're either in the first league or top league, or you're nowhere. So I respect people that invest their money in some private closed funds. But for entrepreneurs, if they really want to be in top league, they need to speak to funds because networks is everything. These are exits. These are like further steps of financing. Google is not Google because like Sergey Brin and Larry Page. Yes, large part what they did is their IP, but who was around them, and ask this question of system of life support. If you hire the best venture capitalists and together with them start living, you get access to the top league. Agree? Yeah. Cannot add anything to that. Please. Again, I have two questions. First, I speak about IT, that IT funds 50, 60 applications per day receive. And what is your experience of non-IT project? How many do you get for consideration? And second question, funds of the top league and in Russia, by which criteria can evaluate, like you have venture industry reps, and here, can you like say about some criteria, maybe the life depends, like how many exits, how successful exits, and how, what about and rigid conditions to entrepreneurs. If you have the people made successful exits, that's what you need, and the network you also see, who they talk to, etc. In Russia it's difficult because already deals already made are not existent. So by indirect things we can judge to which bankers, and we'll talk about it later. And it's about volume of projects, non-IT that you receive. We look at the projects mostly. I have a team looking myself, because technologists, they are introvert people. They don't send like get it quick. That people who dedicate their life to this, they know what they do, and we are looking for them ourselves. And I can say that the previous experience in international fund, I evaluated 2,000 tech projects and selected 10 for financing. question to Moscow University that did statistical study. If we take a share in a breakdown in terms of countries and shares that investors receive in portfolio companies, do they depend on countries or on average it's the same range? And is there a trend related to that in countries with rating of doing business is lower, the share of investor higher? You mean the share of exits or that investor hold in their as they enter? So no special trends were seen, provided average numbers on the region, and there are no countries that are out. I would say that the answer is not geographical or legal background. We can get the response in the next section when we discuss structuring deals and legal risks. So what is different in these countries, and statistics show is a legal basis of business and risks that investors encounter, and opportunities of exit and enforcement. That's all dependence of judges. That's very important. They think about that, and I probably would respond by the panel of lawyers that we would have here and 4:30. It will be unique discussion, I'm sure about that. So, question. So, final question. I'd like to touch upon a topic of two companies that they applied, but for some reasons they couldn't be here, the RusNano and RVK. So we have excellent opportunity here to think which results from the site until we heard them, results of initiative about introduction of these investment institutions, and how you think whether the purposes were in line to implementation. Maybe investment community representative first. I in 2008 when RusNano was formed, I was invited to a roundtable when we discussed the process of co-investment with foreign investors, and I said that it's all good, but you suggest Russian company, and I have to invest as I don't have the rights, and shareholders are protected. I need English law and foreign. They were fighting 3 years, and as a result they registered a Swiss subsidiary, and all co-investment were done via this Swiss subsidiary. But at the same time the process of changing Russian law started, and my view on that RusNano was created was very positive, because we see how environment changes in both legal and we see those financial instruments, they would be gradually built up, because each person who made money on sales of RusNano projects or working on RusNano, they will invest in this industry, and it will, the snowball will increase. So I see very positive. Any opinions on that? Lots of opinions, and it's not a secret that many were skeptical and was discussed actively. So everything related to state investment will have some footprint of problems related to corruption and irrational use of money. So how do you think that these concerns came through, or using state funds was more appropriate? I think without corruption in Russia would be naive. I heard two schools of thought about RVK. So one school tells that this would be a clean field and needs to be developed. needs a lot of investment and to develop these institutions and all those infrastructure, venture investment, and also educate new generation of venture managements. And it's important because you need to spend a lot of money and make a lot of mistakes and understand that it works and somehow process exits. And finally, the venture industry will grow. And we see that this is happening because the number of funds grow. It's more than 100, 150 maybe venture funds in Russia and Eastern Europe. I cannot tell about the numbers. And this happens. It was worth the money and investment for those who pay taxes. Well, I'm in this category, but it should be more Russian citizens who tell about. The second school tells that state never can create these things, and this is a private industry matter, and any interference takes initiative from private funds. And I'm more than sure that if we look and compare statistics of efficient exits projects from private funds and those funds that were created by RVK, I'm sure that RVK would be, private fund will be much better. I think we need to wait for some time to get the final answer. And I have an opinion that state funds, they are like shooting out of the rifle, and a lot, but something will. But private funds, they are targeting for a lot, but the percentage of successful is higher. So the purpose of the state projects was to stimulate the market. Right. Overall, the more projects to cover so that they grow somewhere. Okay, clear? Questions? Please. I would support Mr. Wright that I'm sorry, I'm from Czech and spend in Moscow. I work in Czech Republic, and that after we joined EU, started to fight for donations and subsidies of EU. It's more about getting subsidies rather than innovations, which is not so bad in terms of financial people, but supports the theory that to have some legal frame on people and don't touch and ownership. But maybe it's one side works slightly different than Israel, where you invest even in the mechanism of state venture funds, and that somehow are taken over. It seems that Russia is going a better way than Central Europe. What's this question? No, it was just a comment. So, turns out that your structural deficiencies are there in the path selected by the countries of CE who joined EU. I think a few times mentioned about Israel. I like to tell to my students, because it's an excellent example when the startup nation for 20 years created a unique environment, and mostly built on a basis of Russian brains, basically, and from the Soviet Union. So it's about 1,200,000 immigrants from...
There's about 1 million, even more, immigrants from ex-Soviet Union, and the lack of natural resources effectively, and this besieged fortress philosophy has created fertile soil for innovations. And I think the East European countries, which are short of natural resources, and small-sized countries, they have seemingly disadvantages which may be turned into advantages. They have to work on that. No choice. And the main shortcoming and an obstacle in Russia is in innovations is the abundance of natural resources. If once oil and gas are depleted tomorrow, then innovations will begin to develop in this country. I have one more question to Will. By various estimates, pro-public or anti-public assessments, an attempt is being made to evaluate the high-tech market potential. Some say there will be trillions worth in the minds of our engineers. Others say no, nothing significant. In your opinion? And there's also an opinion that everything what we had in the 1990s was evacuated to the West, and all of it is there now. But could you give a comment on, does Russia really have in its reserves some high-tech knowledge, non-IT product knowledge? I mean, for investor interests. I think it's associated rather more with the third phase. It's phase one, privatization. Phase two, all assets grow in value, and the majority of people they are in phase two. I've purchased an asset, they say, it's growing, but nothing should be done to it. I'll anyway sell it anyway. What we see, the situation is very hard indeed. If you take a look at professionals, 50 or 60 years, their ages, very few of them have set up young teams around themselves. And now these high-tech teams, there are not many, but their potential. Because of confidentiality, I cannot describe my own investment, but what happened with shale gas, shale oil. Similar technologies are available, but the question is whether it may be done in Russia. Lawrence is quite right, because while oil is a high value, gas is easy, goes for sale, no one is motivated. As soon as some processes begin, I believe these latest crumbs can be, but I don't think it will be trillions value. I don't have an illusion on that. Now we have heard a statement that oil serves us poor service. Probably some new truth will discover as soon as this fact disappears in our economy, but no one knows when it will occur. We have discussed so far the CE region and compared the member countries. But what can you say about this? The CE region is viewed by investors outside it. To compare primarily with Southeast Asia, with Latin America, with the developing markets, emerging markets. To what extent the CE may be regarded an out-of-the-track road, backyard for investors in these markets, or it's vice versa. There is a good outlook which has been underestimated. Shall we take probably Moscow State University first? Our risks are higher, but the income rate is high as well. I think it's more all saturated in the West, but we still have, not everything is saturated with products and new technologies. The region as a whole is more prospective, I believe, than the old Europe. But what about the emerging markets, Southeast Asia and Latin America? To what extent the CAE is competitive against them? When we were conducting our study, there was some trend, but not explicit. First, how to check, to confirm that that non-IT investments often prefer to go to the countries which had them old schools, like the Warsaw Pact and other ex-Soviet republics. There is a high share of non-IT investment. As for Latin America and Southeast Asia, I don't know. I believe our schools were more impressive. So I think the CE region will be more attractive. Well, do you have investment in the regions, in Southeast Asia and Latin America? And do you look that direction? We looked at the Central Europe. We have not invested anything there. We looked at Singapore. We're still keeping our eye on them because it's a big hub for Asia. I think everybody should understand his competence. It's important not to scatter our brain. It was well said about snipers and big cannon used against sparrows. We don't have the right for mistake. We're using our own money. We are responsible for spending with our money, with third parties' money. We invest only where our competencies are high. Therefore, it seems to me I can say something hyped about Eastern Europe, but it will be wrong. Is it right to say that competition between the regions does not exist because every region will have its own investors focused on it? Well, strange as it might seem, you might have read a book, The Ocean Strategy. All my life is like that. I'm out of competition even now. Lawrence and myself, we're now carrying the brunt, and there is no competition. It always happens like that. You always try to find some new niche to penetrate in, and when everybody begins to cry, yes, it's high time to sell. Everybody knows that. But I think there are some advantages. Those who are closer to the market, to their customers, they enjoy an advantage, while Russia behaves unattractively for investments. And the result will be clear. These monies will go elsewhere. The money it's like liquid. It goes where? To a valley, to Netherlands, lowlands. So we are sort of come to consensus that competition between the regions at the level of venture investment is not that high, rather than globally, where global foundations, global funds are involved. There is a trend. In the venture market, there is an explicit specialization. Yeah, right? One of the main competitive edges of the CE region is primarily its human resources. Cheaper labor rather than elsewhere in the EU, and it's higher qualified and competitive versus other emerging markets. And until these resources are depleted, the competitive edge in this region will remain versus other regions. It's a very good keynote, very positive, and only 1 minute remains until the end of our session, and I believe it will be sinful to continue. Is there any question? Yeah, we can answer to one or two. I have a question about prudential oversight, which is exercised by the investor over the projects and the project teams. We know that recently some managers at Skolkovo were suspected in embezzlement, and the story is being spinned off. The accounts chamber is coming with its inspection. How do you see the future of this oversight body? Or maybe some structure, some competitive, which will be efficient in Russia, given the specifics? It's an excellent question. It explains, I guess, why that the foundation with 400,000 investment will never be successful. You hit the target. The point is that when you work in Russia, you need to be very concentrated because the share oversight is the main thing which should be done. And even if you tailor a structure by best rules of the London Stock Exchange, what's expected from you is to set up, an auditing committee or a remuneration committee, strategies, and so on. But the role of the audit department or service is very important. We can continue to the next session. Generally, accounting. We have receivables and payables. Two sources where you get scoop data. It may be wrong or right. You, as the manager, are supposed to go to tour everything to see for yourself. If you're in the Canary Islands or in the south of France and you believe that everything is well under control, it might be an illusion for you. And point 3, it's very important that you need to have a well-based support structure for the rules of the game, and everybody should know what happens with the rule breakers. We shouldn't be wishy-washy in decision-making here. Then more or less the structure will operate, but personal involvement every way is critical. So let us take it, the subject, to the extent we were capable. We have disclosed it. And hopefully the terms for innovations and venture investment in the country will grow and improve. And we are waiting for you at the next session.